Question number 8, section C. This is what we need to discuss. Yes or no? So we need to discuss question number 8. Nova Electric Limited is engaged in the business manufacturing and selling range of electronic parts. It's considering production of a new electric meter for solar panel installation using new machine. The new machinery is expected to cost, so it's an investment appraisal question. So expected to cost 80 million, a 5-year lifetime, and working capital investment expected, okay, 12 million. The sales over next 5 years, see here, when it comes to investment appraisal, if they give net cash flow, no problem. Directly we can apply. And we can find out NPV, we can find out IRR, whatever the decisions we want to make, we can make. If they give directly net cash flow, the net cash flow is directly given, no problem. But if they give sales, expenses, then you should find out cash inflow, you should find out cash outflow, then you need to find out net cash flow. After that only you need to calculate NPV. You got my point? So these are the two types of questions possible. These are the two types of questions possible. One is directly they will give net cash flow, right? So if they give net cash flows, no problem, directly we can take it. But sometimes they might give the details related to what? Cash inflows. Details related to what? Cash outflows. Then we need to find out net cash flow. Here am I, see, they are talking about sales. Abdullah, any problem? Online students, am I audible? Online students, can you all hear me? Am I audible? Right. Fine. So they gave sales. So if they gave sales, the question is this format. Right? So here see, electronic meter sold 600. So they gave selling price also. Variable cost given 430, right? And inflation rate is also given 10%. They are giving details. To find out the cash inflows and to find out cash outflows, and you need to get, end of the day you need to get what? Net cash flow. So let's do this question number 8. Question number 8. Investment appraisal. Okay, so here see, if you take this question, there are 5 years. That is confirmed, right? Investment, how much invested here? All entire questions I made in thousands to make comfortable and easy. So if I take Abdullah, is the screen visible? You all can see that double screen or single screen? Single screen. Only one, right? Okay, fine. So investment, see here in this question, they said they need investment 80 million. They need investment 80 million. So thousands we are doing. Investment is 80,000. Outflow, investment is outflow. See, that's why I told when you get detailed information related to cash inflows and cash outflows, get the detail column. Then it is easy to identify. The investment is done. And also they are telling we need working capital investment also. So let's take second column. There is a working capital. Why we are doing like this? Sometime you might say, we didn't do this in the class, no, because class we did but directly net cash flow. If they give direct net cash flow, no problem. Right. Uh, if online students, if you want to communicate anything, please type, because speaker is not here. Right. Speaker, that means I can't hear because it gets recorded. So if you have any doubts, you can drop a text. So what if they won't give a working capital? If they didn't give working capital, no problem, because working capital is an expense here. That's an outflow. Fine. So for working capital, we need 12,000. That is also immediately we spend. Immediately we spend. If they didn't give, no problem. Just leave it. Then 5-year useful time and the working capital investment is expected 12 million. The sales over 5 years. Sales over 5 years. Right. So how much sales? 200,000, 250,000, 350,000, 300,000, and 270,000. 270,000. Okay. And they said electronic meter. Electronic meter. Here the sales are what units are. Sales are not in the price. So I need to do the working now. Working number one, year one, year two, year three, year four, year five. How much sales units? 200,000, 250,000, 350,000, 300,000, 270,000. All these are sales units. And they gave sales price. Then I can get sales value 600. 10% increase, so 660. See here, inflation is 10%. Therefore, 600 becomes 660. 660, another 10%, 726. Another 10%, 798.6. Another 10%, 878.46. Copy this. And now, Lamai, we can find out the sales value. Now we can find out what? The sales value. We can find out the sales value. Get the find out the value, sales value. Get the sales value, Lama. Yeah, let's go for the decimal values because I'm doing things in thousands, right? So it's a big amount. Even one decimal become big C here. The working is in thousands, right? So let's go with the decimals. Get the value. I bring a calculator. So let's take here 200,000. So I'll do like this to make easy. Let's take the variable cost and let's take the contribution, right? So let's take variable cost because they gave, otherwise uh, we need to multiply by one. So variable cost also given in the question. See here, the variable cost if I take, it is 430 per unit. 430 also increased by 10% inflation. So 430. So let's take 430, 10% is 473. 473, 520.3, 10% I increased, 572.33 and 629.56. So sales price minus sales price minus what? Variable cost is contribution. 600 minus 430, it is equals 170. This is per unit I am telling. Huh? Fine. Multiply with the sales units. Huh? Just I am calculating unit wise. 660 minus 473, that is 187 per unit. Then 726 minus 520.3, that is 205.7. Then 798.6 minus 572.33, that is 226.27. 878.46 minus 629.56, that is equals 248.9. All these are unit wise. Now let's take the total contribution. Net cash flow. Therefore, total contribution here multiply by 170 is multiplied by 200,000. So that is, amounts are in thousands, don't forget. So 34,000. 46,750. Here 71,995 and here 67,881, 67,203. All these are total contribution. All these are total contribution. Right. If you want, you can take one by one. we can take one by one as expense, but I take the contribution as the figure here. So I'll take this contribution. Contribution is an inflow, but in profit terms, right? So if I take year one, 34,000, 46,750, 71,995, 67,881, 67,203. 67,203. All these are what? Contribution. Copy this. Why we are doing this, Lamai? Because they directly didn't give net cash flow. How to get net cash flow? The details they give in detail. So one by one we should work to get the net cash flow. That's why your investment appraisal question become little big. For that you should know what is cash inflow, what is cash outflow. Right. And Lamai, if you move to the question, so the first information I took, the second information, the annual fixed cost is 18,000. Annual fixed cost is 18,000, which includes depreciation of machinery straight line basis. Right. So here see, fixed cost is 18,000. Then how much depreciation? How much depreciation? Right. So that we need to find out. That we need to find out. One minute. Lamai, here see, if you take this 18,000, 18 million, 18 million, it's include what? Depreciation. Includes depreciation. Depreciation you cannot take. Reason why? Depreciation is a non-cash item. Abhi net cash flow to we need to find out net cash flow. So you can't take depreciation. So working number two, let's work on fixed cost. So depreciation. Within bracket write down fixed cost. Within bracket write down fixed cost. So here see, fixed cost with depreciation. How much? 18,000. Amounts are in thousand. So fixed cost with depreciation is 18,000. Now we need to find out depreciation. We need to find out depreciation. So that is we need to work out. So let's see here. The machine is depreciated straight line basis cost over useful life and capital allowance claim 25% for this purpose. Capital allowance claimed 25% for this purpose. Right. Copy this. So here see, over useful life is 5 years and the machine cost is given 80 million. 80,000, concentrate. So the depreciation, students, cost divided by useful life. Cost is 80,000 divided by useful life is 5 years. That means equals to 16,000 per year. So depreciation 16,000 for 1 year. Fixed cost is 18,000 for 1 year. Therefore, excluding depreciation, the fixed cost is 2,000. Excluding depreciation, the fixed cost is 2,000. Is that clear? Abdullah, understood? Jazim? Now, Uday, let's go to this. Let's go to this fixed cost. Fixed cost. Fixed cost, we can't take what? Depreciation. Annually 2,000. Annually 2,000. Annually 2,000. Copy these workings. Calculating NPV is not a big deal. Finding out the net cash flow is the process. Then this one is also done. And they are telling thereafter selling price and variable cost are included. That is also machine is depreciation. Okay. Capital allowance. Okay, fine. I'll take this capital allowance with income tax. Income tax also I'll take it. The marketing expenses incurred in the first year of the production 8 million. Marketing cost. So let's take marketing cost. First year 8 million. 8 million means 8,000. It is arise only in the first year, not other years. So take the marketing cost also. Take the marketing cost also. Now, working number three, income tax. Working number three is income tax. Year one, year two, so here income tax, if I take, students, right, they are telling the company pays income tax 30% per annum, right, 30% per annum. It should be paid in the same year. It should be paid in the same year, right? And also there is a capital allowance 25% per annum for tax purpose. There is a capital allowance also. So they should pay 30% income tax. 30% income tax. So every year they should pay income tax 30%. 30%. Right? So let's take cash flow. We need to find out the cash flow. Cash flow, we need to find out. 30% is income tax. 30% is income tax. So Lamai, here let's take cash flow before tax. Cash flow before tax. So 34,000 minus 10,000, 24,000. 46,750 minus 2,000, 44,750. 69,995. 65,881. 65,203. 203. Why I took this value? From this only they are telling 30% income tax. May value nathang, I don't know how to calculate income tax. That is the reason I got. Otherwise, if they give, okay, income tax is 5,000, 3,000, 2,000, 1,000. If they give the amount, I can directly take that also as an expense column here, outflow column. But they didn't give for the net cash flow amount. Yes, we need to pay 30% income tax. So from not directly from this, right? This is what cash flow. This is what cash flow. So we need to find out the profit. So the working is required. So first I'll take the cash flow. First I'll take the cash flow. 24,000, 44,750, 69,995, 65,881, 65,203. All these are cash flows. All these are cash flows. And here they said there is a capital allowance given. There is a capital allowance given. So capital allowance, 25% of what? Cost. So 80 million, 80,000, 25% each year means 20,000, 20,000, 20,000, 20,000. So 4 years of the cost, capital allowance. This is my cash flow 24,000. Allowance is given 20,000. So taxable amount how much? In tax you might study. Depreciation is not allowed. Instead of that, capital allowance is allowed. So 24,000, capital allowance is 20,000 means the taxable profit is 4,000. Here the taxable profit is 24,750. Year 3 the taxable profit is 49,995. Here the taxable profit year 4 45,881, and year 5 the taxable profit 65,203. 65,203. Year 5 65,203. 65,203. That is year 5. Now 30% we should pay income tax. 30% we should pay income tax. 30% of 4,000 is 1,200. 30% of 24,750 is 7,425. 30% of 49,995 is 14,998.5. 45,881 into 30% is 13,764.3. 65,203. 30% is 19,560 point. So this is income tax. This is income tax. This is the expense payment. This is the expense. So why we did this working? In order to find out how much of income tax that we pay. If they give income tax amount directly, no problem. Directly we can take as a column. But here they gave what? Just 30% of income tax. Income tax is given normally based on taxable profit. To get the taxable profit, cash flow we should be adjusted with capital allowance, because depreciation is not allowable expense in the tax. Capital allowance is allowed. So I should adjust with the capital allowance and I should get it taxable profit. Based on taxable profit, 30% income tax. 30% income tax. So first I got the net cash flow, the cash flow available at that point. Then I adjusted capital allowances and then get taxable profit. From that taxable profit, 30% is my income tax payment that we find out. Now I can take this income tax payment to where? My working. Right? Copied working number 3 income tax. Copied working number 3 income tax. Income tax working. Copied this. Abdullah understood. Jazi. Atif. Lama, it's bit complicated only. It is not direct question. It's not direct question, but there are pieces given. Right. Sales detail given, expense detail given, tax detail given, fixed cost detail given. You should arrange one by one everything. Then only end of the process only we are getting what? Net cash flow. So still we are in that process. So they said income tax and we calculated income tax, right? So first what we did, we find out the contribution, right? Cash flow, cash inflow for us after expenses. Then depreciation removed because it's irrelevant. Fixed cost we took as an expense. Then income tax is also payment. It's an expense. I should take that here. So here write down income tax. Here write down income tax. So income tax, year 1 1200 outflow, year 2 7225 outflow, year 3 14,998.5 outflow, year 4 13,764.5 outflow, 19,560.9. This is 0.3, this is 0.9 outflow. Now almost we did. See, contribution inflow. So why income tax is year 5 13,560. How much? 13,764, right? 13,764. Is that clear? 13,764. How I got it? First, 65,881, that is cash flow, minus 20,000 capital allowance, 45,881. From that, 30% is 13,764. Is that clear? Understood? 13,764. You got different answers. Different answers. Lamai, see this working first. See this working, see this working. Cash flow minus capital allowance equal taxable profit. For the taxable profit, 30%. Check whether the amounts are correct. Amri, I can't hear you. Type. Copied this working first. So 19,560. 19,560 is the last one. So income tax is done. Finally, Lamai, we need to take the net cash flow. This is my net cash flow. Don't make mistakes. Don't make mistakes, students. If you made a mistake, when we are calculating the values here, net cash flow might be wrong. Net cash flow might be wrong. I'll show you working one by one. First, see that this is working number one. Through this only I got contribution. Working number one understood, everyone? Yes or no? Yes or no? If it is yes, raise your hands. Done. Working number two understood, depreciation and fixed cost. Is that clear? Right. Working number three, income tax understood. So income tax, how I calculated, I got the net cash flow. See here. What I did was, I got the net cash flow. This is the cash flow. I find out the cash flow. How to find out this? Contribution minus fixed cost minus marketing cost equal cash flow here. I took this cash flow first. That's what I wrote it here. After that, I minus capital allowance. The difference we call taxable profit. From this taxable profit, 30% is income tax. Is that clear? Take the calculator and type. Don't just copy my answer. Atif understood. Jasim understood. Jasim, don't look at that side. Jasim, if someone is going, don't look at that side. First, you see this question first. Understood. Akif understood. Ahmad can see. Ahmad. Right. Now, Budel, let's take the net cash flow figures. Let's take the net cash flow figures. I'm writing net cash flows in purple color. See here, the net cash flow year zero, how much? 80,000, 12,000, total 92,000 outflow. 92,000 outflow. Year 1, 24,000 minus 1,200. 22,800 inflow. 22,800 inflow. Year 2, 44,750, 7,425. 44,750 minus 7,425. 37,325. Then 69,995 minus 14,998.5. 54,996.5. Then 65,881 minus 137,64.3. 52,116.7. 65,203 minus 19,560.9. 45,642.1. These are the net cash flows. These are the net cash flows. But there is another concern here. 1 minute. Don't write this. Working capital, how much we invested here? 12,000. Normally, students, if we invest working capital, that working capital should be recovered end of the year. Investment can be recovered, cannot be recovered. Working capital is always recovered at the end of the year. Working capital is the amount that we put for the operations that we should take at the end of the year. So that also you need to consider here. That also you need to consider here. Right. So here see 67,203 minus 2,000, 65,000 minus 19,560.9 plus 12,000. Answer 57,642.1. 57,642. Then you might ask a question, sir, when you are calculating net cash flow earlier for tax, why you didn't add this 12,000? For that you should add, tax is not paid on the investments, tax is paid on the profit. So cash inflow, cash outflow related to operations we take here. But this is working capital investment. Working capital investment. So 57,000. Don't forget this. Don't forget this. I can't take that here. Right. I can't take that 12,000 to income tax because income tax is paid on operational income, taxable profit. So this is not a profit, it's an investment. That's why I didn't take. Right? So investment is initial investment, that is 80,000. Working capital, the amount that we invested for operations initially, that we should be recovered or take back end of the useful life. That's why initially 0, year 0, 12,000 outflow, end of year 5, it is inflow. So once this done, understood? Understood? Net cash flow understood? Then it is a normal question. Atif? Net cash flow understood. Lamai, if you get the net cash flow, thereafter what we did in the normal question, the same format we need to follow. So first copy this net cash flow. This area once it's copied, okay. Now let's move to the question. They ask us to calculate the NPV, so net present value calculation. NPV computation. NPV computation. Year 0, 1, 2, 3, 4, 5. Cash flow. Initial cash flow, if I take 92,000 outflow, that is what we wrote there. 92,000 outflow. Inflow 22,800. Year 2 37,325. Year 3 54,996.30. Year 4 52,116.70. Year 5 57,642.10. These are cash flows. This cash flow only we took it. The workings I showed here. The working I showed here. From the students, from this discount factor we need to apply. The discount factor here they said 18%. Year 0 discount factor is 1. Go to discount table, present value table, 18%. Year 1 is 0.847. Year 2 is 0.718. Year 3 is 0.609. 609. Year 4 is 0.516. Year 5 is 0.437. These are discount factors. Discount factor table is there. So just look at the table and get the values. Now students, we need to get discounted cash flow. Discounted cash flow, 92,000 outflow. And if you discounted here 19,312, if you discounted here 20, if you discounted here it's 26,799. There is a question. Who is asking this question? Abdullah. Abdullah. Working capital 12,000 that I told you here. His question is how this value came. That is your doubt, right? What I am telling is the මෙහෙමනේ investment කියලා කියන්නේ it is not recoverable. For that only we are getting return cash flows. Working capital investment එකක් අපි දාලා තියෙනවා පුතේ 12,000 now. That I will take back at the end. So working capital investments generally the end of the product useful life we take back. එතකොට අපි invest කරද්දී ඒක 12,000 outflow නම් end of the year එකේ අපි ආයෙ එක ගන්නවා. Therefore it is inflow. Is that clear? Working capital එකේ ළමයි මොකුත් තේරුනේ නැත්නම් just ignore concept එක මෙච්චරයි. Working capital එකේ invest කරා නම් ළමයි we will take it back end of the life. You got my point? So when we invest it is outflow. Now when we are taking back it is inflow. That's why I added 12,000. Second doubt එක ඔයාලට එන්න පුළුවන් doubt එක තමයි ළමයි why sir you didn't take this 12,000 for income tax calculation. එතකොට income tax calculation එකට ඔයාලගේ ඇයි මේක ගත්තේ නැත්තේ කියලා. For example if you take here I took only this value and this value and here it's 65,000. Why you didn't take 203? Why you didn't take එතනදී? ඒකට තමයි මම reason එක කිව්වේ. Normally income tax is paid on taxable profit. Is this profit? Is this income? No, it is not an income. It is a kind of an investment that you put and you are taking back. That's why I didn't take it to income tax calculation. Abdullah understood. Jasim understood. Jasim, don't look at auntie. What you understood, but what I said understood. ඔයාලා 360 degree camera වගේ ළමයි. You are seeing all around the world. Please look at the workings also. Jasim, Understood? Akif understood? Atif understood? Right. So discounted cash flow 18%, year 3, year 3, 33,493, 26,892, 25,190. So all these are positive values. This one is negative value. Now let's take net present value. So net present value is 39,686 positive. Project is accepted. Project is accepted. Abdullah, if Hashib sir can you please check whether the mic is working or not? Because when you speak, you guys speak, I can't hear. Right, it's easy. If you have doubts, you can ask. Mata call karan nonne. Right, then when you have a doubt, you can easily ask. I can hear. Lama, is this question understood? Sir, year 5 income tax is 13,560. Huh? Atif? Ah, okay, okay. So why we didn't add? Good question, Akil. Akil have valid question එක. එයා අහන question එක බලන්න here. See, sir, මාර වැඩේ නේ අතරේ. See, you added capital allowance year 1, year 2, year 3, year 4. Why year 5 you added? You didn't add it. What is the percentage of capital allowance, Akil? 25%. So the 100% value is covered within 4 years itself. So the cost is 80 million, 25% every year means maximum 4 years you covered everything. ඔයාට capital allowance එකක් claim කරන්න බෑ. The value is 80,000 means 100,000 you can claim. Akil understood? That's the reason is 4 years. If it is 20%, I might take it for 5 years. Clear? 20% now 5 years now. 50% now 2 years. 25% means 4 years. Akil understood? Right. Okay, copy these answers. Mr. Abdullah, say hi. Abdullah, speak. No, I can't hear. Jasim, Jasim, sing a song. No, I can't hear. I can't hear you. Can you ask senior lecturer Hashib sir to check? Now, Jasim, say hi. How are you? Speak something. Guys, speak something. I want to see whether I can hear. Online students, can you speak? Right. No. Fine. No, I can't hear. I can't hear. Okay, fine. Let's check. Let's check that issue. Fine. Now, Bhutan, let's do next question. Standard costing and variance analysis. Investment appraisal is very easy, right? Jazzy, it's very simple question. Second part. Identify whether company should proceed with the project. Identify whether company proceed with the project. For that only I gave answer accepted. NPV is positive, so project is accepted. Project is accepted. Right, now let's try next question, standard costing and variance analysis. Question number 9. Try out. Unit break. Ah. Copy. Now Akif, keep speak. Now I can hear. Now I can hear. Okay. Jasim, sing a song. I didn't get what? Then project is rejected. NPV positive project accepted, NPV negative project rejected. இப்பதானடா அதை பாக்குறீங்க. We discussed all these things in the class. Right? NPV rule. When NPV is positive, project is accepted. NPV is negative, project is rejected. NPV is same, you can't take decision at that point. You should calculate IRR in order to interpret. If it is IRR, cost of capital and IRR need to be compared. If the IRR rate is greater than cost of capital, project is accepted. If the IRR is lesser than cost of capital, project is rejected. And if the NPV இதெல்லாம் என்ன Okay, now let's question. Oof. Quickly copy, quickly copy. Online students understood. Namai? You all understood this question? Namai, this question is confirmed question. Every year you will get one investment appraisal. Done? Shall I move to the next question? Abdullah, Atif, Jazim, Akif, Muhammad, Ahmad. Okay. Now, Lama, let's move to the next question. See here. Ha 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 ha. Enough, enough, enough. Right. Pia Limited manufactures sells product W. So here, Pia Limited manufactures and sells product W. The following information has been extracted from the standard cost of product W. So the standard cost of product W, if you take here, direct material A, material B, labor, overheads, variable cost, contribution they gave. The company has budgeted to sell 600,000 units. The budgeted fixed overhead is, Jasim, how much? Budgeted fixed overhead, how much? Jasim, budgeted fixed overhead, how much? How much? Ah, very good. Actual details are given here. Actual details are given here. And the question number one is, they gave some variances also. The question number one, sales price variance. Sales price variance. So, first one, sales price variance. Sales price variance. First question, sales price variance. So let's take the sales price variance, actual contribution minus budgeted contribution multiplied by actual quantity. So budgeted contribution, actual contribution 145, 165 into actual quantity is how much? 645,000. Actual quantity is 645,000 units. So get the answer. 165 minus 145 into 64. 12,900 3 zeros. See, our actual contribution is lesser than budgeted contribution. Actual contribution is lesser than budgeted contribution. Therefore, it is adverse. Therefore, it is adverse. Copy this. For this, you will get 2 marks. Copy this. Now, sometime you might have a doubt like this, sir, why you took contribution instead of taking selling price? Right. I'll do in that way also. Actual price minus budgeted price multiplied by actual quantity. Here see actual price is how much? 1,180. කොහොමද මේක ගත්තේ? See, this is your sales value 761 100 3 zeros divided by this is your actual selling units equal 1,180. But budgeted selling price is 1,200. Budgeted selling price is 1,200. So let's take that here. Budgeted selling price 1,200 multiplied by 645,000. Answer is same. I took contribution because it is shortcut. No need to do additional working. 1,180 calculate කරන්න ඕනේ. But if you confused, if you go for the same formula method, just do both. Both give same answer. Atif, that is your doubt. Understood? Now clear, Lamai? Yes or no? Jasim? Huh? Question. Jasim is always asking question which is given in the question. See, this is 165. No, this is 165, and yes. Actual contribution 165 is given. Budgeted contribution 761 100 minus all these cost, variable cost. Then the contribution divided by the units 145. Now do part B. Second part. Direct material price variance. Do it. Direct material price variance. Jazim, do it. Okay. Direct material price variance. Direct material price variance equals direct material price variance. What is the formula? Standard price minus actual price multiplied by actual usage of material. So standard price how much? Standard price is 180. Actual price we need to find out. Actual price we need to find out. Here 239 593 zeros divided by 1235 3 zeros kilogram. What is the answer? 194. 194. Material B also calculate. Material B also, this is material A. Material B if you take 480. 329760 divided by 687,000 kilograms. So now 180 and material B is 500. So let's take this. For both materials we need to calculate. I'll calculate for A. Standard price is 180, actual price is 194, and actual quantity we purchased is 123,530 kilogram. So 17,290,000 adverse. This is for material A. Material B, if I take 500 minus 480, actual usage is 687,000 kilograms. Given na question, I just don't ask from where you took it, right? See this one and this one. 687 actual usage. That is equals to 13,743 zeros. That is also favorable because we purchased less than expected price. So total material variance, total material price variance, if you take 3550 adverse, you should take both because there are two materials. Copy this. Understood? Now I understood, yes or no? Jasim, Abdullah, Akif. Okay, now time is 10:20. Take a break. I'll start at 10:40.